The situation with regards to these trade wars and tariff is so uncertain that the Bank of Canada themselves is not really prepared to make any kind of projection how this is going to look like in the light of these post-tariff situation. Okay, so we are seeing a lot of uncertainty in the market. Tariffs on, tariffs off, tariff delayed, tariffs are back on 25%, 50%. China jumped in, putting tariffs on Canadian agriculture. So a lot of uncertainty, and this is changing on every day basis. We wake up and Trump announced something completely different. Okay, so Bank of Canada's chairman also announced that his policy rate, his monetary policy, is not really tailored to project any economic projections because of these changing dynamics of these trade wars. Okay, so he said his policy rate needs to be completely shifted the way they are assessing the economic projections, because now if he considers all these threats from the trade wars and tariffs, the economic projection, the model that his team has been working on may not work to project the economic outlook. And of course, we all are seeing the dark clouds of recession ahead of us because of these challenges. And we are seeing this is being played out. Okay, we are seeing the inflation is ticking up, and because of course, the obvious reason is GST break that the government gave, but also a lot of private businesses are pulling forward their future orders to avoid any potential impact on their businesses because of the tariffs. So we will see an uptick of inflation going forward because of those pullback orders by the private businesses. At the same time, all these businesses will also delay their investment decisions going forward until the situation is clear. So new hiring will not happen. New investment with regards to buying machinery, any expansion will actually hit a pause because nobody will be spending money in the uncertain situation. So there's going to be a lot of negative impact with regards to GDP and also hiring front as well. So the unemployment may go up. At the same time, we are seeing that. So all of these things are projecting a recessionary scenario. Okay, we are seeing the real estate market is also halting. Korea published their numbers for the month of February, and there is a 10% drop year over year for the same month. That shows the activity is completely dead in the market, and we are heading into the spring market, and the signs are not really looking good. And at the same time, Canadians are also leaving in high numbers going back to 1967. According to Stats Canada's published number, the emigration, which is opposite of immigration, where the Canadians are leaving for good, has hit the highest number since 1967. So all of these things giving you a picture where the country is heading towards into an tough economic conditions. Unemployment is rising, inflation is going up. The trade wars is going to potentially move some of the businesses from Canada to the United States. So all of these things are not really painting a very good picture for the workforce to stay in the country. So people who have options open, they will likely to move out of the country to pursue another life, either in the US or in another country like Middle East or in the Europe as well. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. So what should we do? I think we all have to think about our investment, our financial future. We should diversify our assets. Don't keep everything in Canada. Maybe move some of the capital outside Canada, invest into other markets, European markets, Asian markets, Dubai, Middle East. There's a lot of activity happening in the Middle East. So diversify your wealth so that you have some element of your net worth outside of Canada, because things, to be honest, are not looking good in Canada, and we all have to protect our own financial future, because nobody will help us. The government will not help us. So stay safe,